China's trade surplus widened to the highest level in 7 months. Imports grew at the slowest pace since 2009. Inflation also accelerating at the fastest pace in 3 years. For more on what these data mean for the global economy, we're joined by Steve Bernstein. He is the head of Oppenheimer Investments Asia, and he's joining us from Hong Kong. Steve, thanks so much for being with us. A little bit of mix and match with this import-export data. It seems like China's slowing down what they bring in, but they're still sending plenty out. What does this mean for the Chinese economy? What does this mean for the global economy?
Well, it's true, and imports have slowed down. They've imported about 11% less than they did a year earlier from the U.S., and exports are still strong. So what it says is that the Chinese economy is definitely slowing down a bit, and what it says about the world economies is that countries are want to earn their way out by exporting, like the U.S., earn their way out of deficits and turn the economy around. It's going to be a bit more difficult as China is reducing their imports. So but it definitely shows China slowing down a bit.
How successful, Steve, do you think that China is doing with trying to control inflation? I mean, this latest read shows it at a 3-year high. Is the government making the right kinds of steps?
They've made a bunch of steps. I think they're definitely going in the right direction. There's be 5 interest rate increases. I personally think there'll be one more coming up. They've said that inflation is their #1 priority to tame it as it should be. And the feeling, I think, is that they do a bit more. They tighten reserve requirements, which they've done already. They try to restrict lending. And the second half of the year, hopefully, they'll start to see some flattening out of inflation. But there's still more to be done.
To what extent does the average investor, Steve, have to be worried about inflation getting out of control and actually hitting China in a more social sense? We just heard from our reporter, Margaret Conley, talking about the possibility of social unrest increasing.
Yeah, I mean, it's what's hurting them is inflation. It's happening in, for example, in foods and goods and services. So pork is up 57%, the price of pork. Now, pork is a significant staple of the diet in China. So having prices up 57% in there and prices of rice and other foods does create some problems. And there's been some protesting and there's been some issues with the, the people in China that have to put up with this. And, I always worry about barbells of economy where the rich, the gap between the rich and the poor. And obviously, inflation doesn't help. So I think it's something they really need to get under control and quickly.
Well, it sounds like from what you just said, they're at least going to go for one more rate increase. Steve, thanks so much. Steve Bernstein, Oppenheimer Investments Asia, joining us there from Hong Kong.